Hey everybody, the fun continues. I have a thing that sits here on my desk that I push to go live and push to do the things like change the screen, and I pushed the button and nothing happened. I was like, uh, I was like, I want to go live, and I was like, and then I tried to change the scene, and I was like, nothing happened. I was like, well, this is no good. So it wasn't going to be a very good show without that ability. So anyway, jumping right into it here. Now I moved all the windows around so I could fix that. Let's see if I can get the. So how's everybody doing? Everybody doing okay? Doing good. Doing good. All right. Where'd the poll window go? That's what I wanted to. That's what I need to have. Come on. Do me a poll. That's what I wanted. Reloading. Come on. Here we go. Here we go. Right place. Start a poll. All right. Here we go. Finally. Oh my gosh. Maybe I just need a reboot after this. I don't know. Everything's being weird. Everything's being weird. So, there's a poll, everybody. Oh, cool. I can do it on my broadcast software too. They added that. Cool. All right. Back at it. So we got people voting. Green day, red day. What are we going to have, right? Roll the dice. What are we getting? I don't know if anybody saw this. There was a triple leveraged ETF that blew out. Went into liquidation. Full on liquidation. Like they said the net asset value left in that account is 0. So nobody gets anything in liquidation. It just your shares are gone. Your money's gone. Your exposure's gone. Everything's just gone. That's the danger of these ETFs going into liquidation. So, welcome back to the show. You know that that funny feeling, that warm, fuzzy feeling in your portfolio when the market melt up keeps happening. I mean, it's glorious. It's euphoric. It gets you everything you want. It seems like every stock you touch turns into gold during one of these big bull markets. And when your neighbor, the one who thought diversification was a new craft beer, suddenly becomes a stock market genius because they bought a 3x leveraged ETF on a stock that he doesn't even know what company it actually is, it's kind of a beautiful thing, right? I mean, it feels safe, almost too safe. It's like a casino that's handing out free money to everybody. And what is it they always say about casinos? The house always wins. We just have to wait, right? We just have to wait for the right moment for the flip, for the switch to flip. Gotta wait for the flip. And that's what I'm talking about. I'm starting to hear those familiar flips, the sound the market makes right before it decides to remind everybody what it's like to have some risk in the market. Let's take a little trip back in time. The year is 2018. The market was calm. Too calm. For years, people have been making a killing on a little trade that we called shorting volatility. Shorting the VIX. They were selling insurance on stock market. That's what the VIX kind of does. It's kind of sort of a simplified way. And since the market was behaving like a sleepy golden retriever on a Sunday afternoon, short VIX just cashed everybody's checks every day. Poster child for this was the ETF with the ticker XIV. it blew out. But at the time, it was a money printing machine until it wasn't. On February 5th, 2018, in the last hour of trading, the golden retriever woke up, decided it had the spirit animal of a rabid wolf, the VIX, the market, the fear gauge. It didn't just go up, it exploded. It went from a lazy Sunday afternoon to a full-blown Michael Bay movie in about 30 minutes, and our beloved money printer XIV lost 97% of its value in 30 minutes. In a single day. Poof, gone. This was billions of dollars. Vanished into thin air. Now, in the financial media in the days following, they called it Volmageddon. As in volatility, Armageddon. It was a spectacular lesson in how these complex leverage products can get vaporized. They're designed to give you a turbocharged ride, but they have a nasty habit of driving right off a cliff occasionally. They use daily rebalancing, which means when things go bad, they have to sell into panic. And many times that makes the panic even worse. Kind of like pouring gasoline on a fire. And you're playing with matches and got some nitroglycerin in your pocket. So why do I talk about this? Why the history lesson? Because, as the old saying goes, those who can't remember the past are condemned to repeat it. And right now, well, looks like the market has a serious case of amnesia because, well, I was reading an article last night and it was like deja vu. It highlighted how a 3x leverage short on the chip maker AMD just got liquidated, wiped out, balance zero. AMD's stock surged so fast that the ETF, which was betting on it to go down, went to zero. The company that issued it, Granitshares, they make a lot of ETFs, just posted a little notice on their website that said, hey, sorry everybody, your money's gone. Thanks for playing. Better luck next time. And here's the kicker. The same companies that are watching their products evaporate in Europe are lining up at the SEC's door, begging to bring even more of these weapons of mass financial destruction to the U.S. market. We're not just talking about 2x leverage anymore. We're talking about 3x leverage on single volatile stocks. What could possibly go wrong? All right? I've even seen 4x leverage out there. I mean, it's a gold rush. Everybody's invited to the party. Just bring your cash. The total money in leveraged equity ETFs is now $119 billion. Think about that. $119 billion can just go poof if we have a big volatility event. We have ETFs that let you bet on Tesla going up, Tesla going down, Tesla going all different ways. And then they've got some income ones too. Leverage income. Hey, double the juice. Triple the juice. And we have some 3x leverage on semiconductors, SOXL. That baby's up 57% this year. We even have a 3x fund on gold miners. Get this. This one's up a mind-blowing 740% year to date. 740% GDXU. So that's opportunity, right? I mean, it was. So where are the opportunities, right? Oh, they're everywhere right now. We've got tech momentum plays. I mean, you can ride with TQQQ with 3x leverage on NASDAQ, SOXL, 3x leverage on chip makers. The gains can be insane, but you're picking up pennies in front of a potential freight train. Don't just don't be the last one coming in the door when everybody's going out the back. Now we have the single stock lottery you can play. Want to grab some NVIDIA? If NVDL, November Victor Delta Lima for a 1x ride on NVIDIA. Or if you're contrarian, maybe look on the other side. TSLL, the 2x leverage on Tesla is actually down 24% this year so far. A bargain, falling knife. I've been playing it. We'll see what happens. The surprise winner here, I mean, gold, right? Who knew gold could be the big exciting one here? Those gold miners have been on an absolute tear. GDXU, 740%. Nugget, NUGT, right behind it. Leverage ways to play, but be warned. It's kind of like sneaking up on a cat. You might get scratched. So here's where the real investment juice kind of comes in. The one thing you need to remember, these are not blue chip stocks. You don't buy and hold them. These are trades. You date them. You don't marry them. Because just like 2018, the music's going to stop. Something's going to blow out. The VIX is sleeping, but it's a light sleeper. It's something that spooks the market. It wakes up and goes crazy. All that leverage cuts both ways. The casino can flip the switch. The house can collect all its money. So by all means, play at the party, but keep an eye on the door. Dance with the beautiful leveraged ETFs for a while, but goodness gracious, have an exit plan. Because when the party's over, there's going to be a mess to clean up. And there we go. Be careful, everybody. It's your money. You can do whatever you want to with it. But yeah. Be careful. All right. Let's end the poll. Let's see what everybody thought here. 86% yes, 14% no. 49 votes out of almost 120 people. Why so contrarian, everybody? Coming in the market with the green, coming in the open. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, bonds, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you want somebody to tell you what to do, consider hiring a financial advisor, although maybe these AI overlords are a better bet these days. Somebody sent me an article last night. It was like, check this out. And it's like, yeah, if you're just trying to buy and hold a portfolio, most of you are traders. AI is not super great at trading yet. In fact, I got told in school many times. This is I took graduate classes in AI, 25 years ago. God, it's going to be a while ago. So the computers weren't fast enough way back when to do hardly anything. It just, you'd set it up and run and it would take forever, and certainly not fast enough to do much of anything to help. But AI has gotten, computers have gotten a lot faster in the last 25 years. Things have gotten a lot better. Now, all of a sudden, all the things I learned how to do, it's funny enough that like most of the AI stuff is all the same as it's been for 25 years. We just didn't have the computing power to run it. Now, all of a sudden, it works. Computers got fast enough. And way back when in the graduate class, I wasn't in graduate school, I was in the graduate class with a bunch of PhD students and me, the undergrad. The teacher was very adamant that AI does not work in the stock market. The randomness, it just doesn't work. Now, a lot of the AI things that are out there right now try to take advantage of human sentiment and then take action on that human sentiment. That's kind of the thing that seems to actually work a little bit. So if you have an AI that can dig through reports and news and sentiment and, blah, 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 and then build you a portfolio, you can buy and hold. But those aren't trades. All right. That's not short-term opportunity type stuff, which is usually what what I'm trying to take advantage of, relatively short-term pricing opportunities. And so far, I've got an image classifier that I've been trying to train on some charts, and it just can't pick out the chart patterns. And there's some people that there's some smart people that I've talked to recently that said, I don't think your chart patterns work. Well, I beg to differ. I seem to be able to predict a lot of things and get lucky more often than I don't, but how do you train an AI to do that? And then if you do, does it change the whole game? Does the AI predict crashes and eliminate the market move altogether, and then the market just flattens out and there's no money to be made? I don't know. Like, that's a existential threat, I guess you might say, to the market. So Monday is a bank holiday in the US. Market will be open though. I'll be here doing the same thing we always do. I have a special guest on Monday too, so make sure you come. We're gonna have a rare first time ever special guest. I'm gonna do an interview here on the morning show on Monday. Then Fed Chair Powell speaking on Tuesday. CPI on Wednesday. PPI on Thursday. So without jobs numbers, which the FOMC rate change announcement that we last did was based on weak jobs. So the BLS shut down. They're not going to release any jobs numbers. The only thing we have is inflation numbers. And if they don't reopen the government and put out the jobs numbers before the end of the month, when we do the next FOMC, what does Powell and his team of awesome bankers decide to do? We've only got, basically they're going to make their decision on how they're going to vote by the 24th. So we got 2 weeks left. The government doesn't open by the 24th. These guys are all going to travel. They're going to do their meeting starting on Tuesday, have their decision on Wednesday. And they don't really take into any consideration any data that releases right there. They've already kind of written up their reports and blah, 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 blah. It's just the way it works. So we've got 2 weeks to, I don't know. Let's do another poll about it. Like, what do you think? Another rate cut on the 29th? Yes or no? Oh, cool. That worked in the broadcast software. Sweet. Yeah, but, they were basing it on the weak jobs, and are they going to cut again? Or are they not going to cut again? That's a big question. Big question. I feel like it's a big question. Because right now, their job owning has pushed this down a little further. Market rate kind of flying parallel here. They could cut again. Maybe. See what happens. So make sure you vote if you got an opinion on it. The DGS2 is the market rate. Fed funds is the Fed funds rate. The reverse repo facility for the Fed is essentially empty. Essentially empty. And David A., you're in Nashville? That's where Sledge is, usually. So anyway, oh, look at this. Morel. Look at her go. Come on, baby. When this gets to 30, be a happy person. We get to 50. If and when we get to 50, it makes it really nice. Real nice right there. This one's kind of been lagging behind too. 50 would be a great place to go. All right. Moving on. See what alerts just fired off. Morel. BT. Ooh. Go check it that one. Check out that chart. Yeah, this one needs to get going too. We need to see this breakout. Beautiful potential there. Has a nested setup. Tag that. Came up shy there. Let's just clear the roll. This is what I'm looking at. That move up, that retrace. 1, 2, 3, 4, 5. 1, 2. This 3 could be ridiculous. If this plays out as a 3, holy bananas. Holy bananas. Mara could kind of do the same thing. I mean, that's what all this gook is drawn on here. Has that move up, that retrace, same, a little bit sloppier, but same kind of big upside potential here. Could do that, but I think that's a little overly optimistic. I think that would be shocking enough. That's just a repeat, like first move, second move. But it's got to go. We got to break through. We got to get going. Gotta go. Gotta get through all the resistance. All the way over here. That's a big psychological level right there between 25 and 35. But if we get through it, it's interesting, right? All right. S&P overnight. Let's see what it did. I swear, I reset this every day. And we're right back. So, I don't know if anybody paid attention. The things I said yesterday kind of came true on the drop. And so we did another roadmap bounce. Overnight action doesn't really tell me much. This one cruising on up, probably 67.70, 67.76. Maybe on up to, let's just move this over now. Here's the high, here's the low. Breaking on through, 68.19 on futures. There is a difference, a price difference between these of about $32, $33 right now. It's down from $60 it was just a couple weeks ago. In Q. That looks strong. That looks strong, my friends. Here's the high, here's the low. Breaking on through, 25, 25, 450. Yeah. So we're going to have a update, or a potential for an update anyway. Russell, a little bit different chart here. Got higher lows, lower highs. Came up into this garbage. So this is was this the move into it? Was that the first move, or was this the first move? And then this is the lower part. So it's either the A wave is here or the A wave is here. When it does one of these watermelon seed squeeze things, where we get lower highs and higher lows, it's always a B wave, or pretty much usually. I mean, that's where these show up. They're called triangles in Elliott wave speak. They show up in the B wave, but you never know if this move was the A wave or if this first move was the A wave. And they can be, you know, like I said, it can be upside down or right side up. This one I drew upside down to this one just to prove the point. They can be corrective down or they can be corrective up. So if this was the trend move up, if this is a trend, this is the A, this is the B. That means that Russell will likely see CSC to finish this baby up to a lower low than where the A bottomed. But on the flip side, if this was the A coming up into it, if this is the correction, that's the A, this whole thing is the B, then the C would go up like that. So this is why they're confusing. It's why there's ambiguity here, because this move looks like 3 waves, and 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 this move looks like 3 waves. And that's a lot of unclear price action. So Russell not providing any clarity. That's the bottom line. Oh my goodness. What have we done? Come on, baby. Come on, baby. Let's wrap this up. So down here in the, anything lower than these lows right over here can wrap this up, but might go take a trip down to 50. It's in the cards. Been in the cards for a couple of years. Gold. Back up in the 4,000s. Was the one-day correction yesterday all we got? Well, the answer lies in the smaller time frame. So far, 1, 2, 3. Proportional hold. First move down, retrace. Next move down, went a little excessive here. 3-wave retrace so far, holding underneath that level. This will be key right here. That level is key. If we can get back above it, gold's going higher. If we stay below it and make a lower low than that low right there, that's your first warning sign that we're taking a bigger trip down in gold. And we're likely to know in the next couple hours whether this is going to break through or we're going to break down. Now, if we do break down, the move down is likely to bottom out somewhere in this vicinity. And then retrace back up to the same point again. And then may take a bigger trip down. Like that. So this is your warning right here. If you're long gold, watch this level and get above it. We're probably going on up for now. If we stay below it and turn down, break down below this low, find a bottom here. We're probably going to spend a few days, maybe even well into next week, doing this, back up into the same area, and then it sets up this potential down here to around 38.50 right there. So watch the price action. Bitcoin. Well, that's a whole set of 3-wave moves right there. 1, 2, 3. 1, 2, 3. Very unclear what we're doing. That might be an A wave. Maybe we could do another B wave and then get another correction here. Although it's possible this was done. The only thing we have to do, don't even have to do it really, but the only thing that really needed to happen was a lower low, which we got right there. Move up, retrace, and now we need some breakout action. This suggests we're going higher on Bitcoin again. Yesterday I warned that was a setup to go lower on Bitcoin. Ether, I was very concerned about, and well, still concerned. If we can get back out of here, we fully tested into this zone. If we can get back out of here today, back above that, it's an all clear. That's a warning sign, though, especially the way we bounced off of it, and we're testing it again. If we go below that low, probably going down to the daily roadmap line. It's kind of the next stop down here. We already hit the 4-hour, basically sitting on the 4-hour, underneath the 4-hour. So the daily, right down here at 36.50 on Ethereum. If we take that trip down. NKD, chopping again. Had a nice green day yesterday, but can't hold on to it today. What the heck is happening? There was some funny business going on in the Forex. So supposedly somebody was selling massive quantities of yen. It's just a one-sided trade, like just dumping. If that breaks out and go higher here, this thing could probably spike up in this area. Dollar. Looky. Guess what we did yesterday? Right there it is. I don't even believe it. It's in the poll. Let's see. Rate cut. 73%. You guys are less optimistic than poly market. Let's see, where is it? Fed decision. Quarter point cut. 91%. And let's see. Let's do another poll. And think of another question. How about this? Do we get a 2% pullback in the market before the end of 2025? That'd be interesting. Historically, we get 5 2% pullbacks every year. 1 5% pullback a year. Historically, we've gotten like none of that stuff. And then a 10% pullback every 6 or so years. And something much deeper every 20 to 30 years. So we've got the dollar popping up here. That's a 3-wave move. That was a 3-wave. And it probably has one more to go. Let me show you. See right here? This is 1, 2, 3. A little bit of ambiguity. So it's kind of like a WX. When there's just one fast move, that's like an X wave. Very similar to ABC, but slightly different. Like when you don't have subwaves, really. X, and then looks like a, doesn't really have a lot to it, but probably a Y wave. Now, probably has a little bit higher to go. We could get this on up here to 100. So the trend was down. This correction so far, if we continue, that would be lower. If, you know, with that 3-wave start, it creates a question in my mind whether this can be a 1, be a 2. We're hitting the proportions that could be a 3. If we get a pullback that maintains above this level, that high right there, be a 4. Then we push up for a 5. Probably be the same size as this, right up here, off of wherever pullback we do. And then probably pull back again in a 3-wave in the same vicinity before we go higher again. And then we blow out the short dollar trade when that breaks above 102. So looking at the Mag 7s, jump up to the daily. Apple been going nowhere. Amazon so far holding. Now here's the level to watch at this point. Watch what we do right here. If we turn down with any kind of violence, this is probably indicating we're going on down substantially. This has a 3-wave down into the roadmap line. So if we get through this, probably coming on up here to the targets, 257, maybe even up to 271. Google hanging right under that 2. That looks like it wants to come back down in this area, possibly even down to this area. If we can hold, got that fib line we haven't touched yet. They're at 263. Meta, nice bounce potential. 1, 2, 3 into the roadmap line. As long as we can hold it. Next level up, right there. Can't read the number. 840, 839. Yeah, Lee. Excuse me. Microsoft. We've held this resistance pretty well. Potential to come down here as long as we stay under that 529 area. We get above 529, probably going on up. On up was 565 right now. NVIDIA. So China started enforcement action against NVIDIA, but NVIDIA doesn't seem to give a flying fudge muffin. Probably going on, probably on the path to 212. Doesn't mean we won't get a pullback, but probably on the path to 212. Tesla. At this point, they're just chopping, burning options right here. Hold. So this baby's priced to move, and especially in the options market, the longer they can hold the rubber, squeeze it in right here, the more options premium they burn off. But eventually it's probably going to pop. We're set to go up to higher targets. The first upside target, 550. The one above that, 600. The one above that, 800. Not crazy numbers. They're all very real fib line targets off of this pullback. It's just a matter of time, though. This could take a while, as you see out here. I mean, it could be well into next year before we get up in here. Netflix, the Skags made a nice pile of cash on this one. If we can break through this 618, this 618, 1264, this where we turned down right there and went lower low. If we can break through that, we're set to rally on up here, 1375 to 1400. Great work, Skags. That does not look like the current list. I guess it was. Leverage, 2x leverage on APLD, 2x leverage on Rocket Lab, ETSC. Somewhat, my chart patterns don't really apply to leverage charts necessarily. So I just don't try most of the time. This looks kind of like a 3-wave down, 3-wave up into that lower high, and potential to get a lower low. And be cautious there. Now, there's potential that this is done correcting. Potential, but there's not really a pattern that's a triple bottom. Like, that's not really a thing. So this dip in one more time would clear up that potential to go higher. CLSX, that's a 2x on CLSK. APLD. Something just blew up outside and flashed the lights. That was weird. Hopefully everybody's still with me. LEU, probably going on up. VRT, we've talked about this week. Rock and roll, baby. Another leverage on ASTS. Things are getting a little crazy here, so watch out for this one. Lower highs. If we can break through, we might go higher, but if we don't, watch out for that one too. Take that back. Lennar. Be careful here. This can resume the downtrend. Right now, we have potential to bring this on down to 110 area. Race can't catch a bid here. But based on what we got cooking, first move down, the retrace. Potentially this could be it right there. That's the first move down. That's the retrace. There's the next move. We stopped right in the vicinity so far. If we get down here, though, it might be indicating that we're going to get further downside. CIN, ridiculous. PALL, go baby go. Gotta watch out for resistance at 140 though. Duolingo. Beautiful. If we can get through that level, we're looking for that level right there. Irene. Oh, 72 is basically here. 71. 147 next up, son. Rocket Lab. Going for the next fib. 94. Korea. ASTS. And going for that next fib at 100. USAR. Crazy. These guys are making any money? No. Have any sales? Nope. Must be a U.S. rare earth. That's just a Trump investment. Warrants. HUT. Look at that baby go. This even has a reverse split. Danger. Danger, danger. NBIS going for 163. SN. That can continue the downside. Be careful. Reddit can continue the downside to the roadmap line. Then we'll see what happens. CRSP. Yeah, they were. So it's potentially completing a 5 up. So we'll have to see on the next retrace. Do we hold a higher low and turn higher? That could be bullish. Marvell. Nice. So this right here indicating we might be able to take this higher again. 146. If you want to grab some Granitshares, MVLL. Think that the baby's going higher. T-Cone probably coming back down. Butter Entertainment, no bottom in sight yet. Humana. So watch for this to hold. If we hold a 50 to 60, if we hold the roadmap line basically right here, that's my rocket ship pattern. This could be big money fast. Right there. Just throwing it out there. Do they have any 2x leverages on Humana? Let's see. I don't see any. But that one, if we hold in here and turn higher, that could be a big, I mean, we could go from 260, 270 to 400, maybe even 470, like really quickly. Talking about like this kind of quickly. KTOS probably getting a little far up there. Be careful. Baba still working on hit that 1618 retracing. Want to see it going up. Baidu retracing a little bit. Want to see that one going up. IONQ. Want to see that one going up. Toyota back to the roadmap line. Lit. Probably needs a retrace. That's one giant pop into that resistance. MOS. Ooh, opportunity. That is a lower low in the right vicinity. This can be a next move higher. The resistance is right up here. Around 45. Yeah, 49. So this has the potential to rally from 30 to 50. Oklo leverage. In tap coming down to the roadmap line. A line. And no bottom yet. Levi. Come back to the roadmap line. Stuff set up with the pattern today. Probably nothing great. Bunch of low volume stuff here. Potential for 39 there. TRV. I don't even like that. Technically matches the pattern, but I don't like it. I'm not even going to bother. Low price stuff. Let's see what we got here. Here's the high. Here's the low. 46 target. ZNTL. Yeah, I don't like that either. Technically the pattern to put us up to 2 and low price stuff. And so I'd be careful. None of these look great today. So, in the poll, let's see what we got. And a bunch of you convinced them why I get a pullback. That's cool. Anybody want to see a cool trade? Let's talk about it. Since you're still here, 90 or so of you. Looks like. Let's talk about a cool trade. Probably won't talk about this with Jack, just so you know. So, NASDAQ. Like, can you do this on something else? Maybe. So, set your timer for like 2 p.m. Come in here, find an option right around $2. Now look how far down this is right now. I mean, that's 500 points down. But at 2 p.m., you've only got 2 hours left. This is a 0-day play. All right, this is not for everybody. Find one, $2 and change, drop down $50, buy the one there. Usually you can get between $60 and $100 of credit at 2 p.m. with 2 hours left. These end at the market close. All right, there's no 15 minutes later, none of that crap. These stop at the market close. Sell that credit right there. Like I said, 50, 60, 70, 80, 90 bucks. I've collected this consistently. So there you go. There's an idea. Be careful out there. I usually try to get down well outside the 2 standard deviations is where I try to do it. There's the 1 standard deviation. Here's 2 standard deviations. I try to be outside of that. And these will collapse as we get closer to 2 p.m. So set your, it's 2 p.m. Eastern, not 2 p.m. Central or 2 p.m. 2 p.m. Mountain Time is the market's closed, and 2 p.m. Pacific is the market's been closed. So 2 p.m. Eastern. Yeah, they're cash settled. There's no stock. There's no getting put. They're cash settled. Once they expire at the market close, cash is yours. You already took it in the credit. So there you go, everybody. There's an idea for you. My expectation today is probably going higher. Unless we top out. That's the caveat here. If we hit these upside targets, we could experience a pullback. But this is looking like little baby 1, 2, 3, 4, and then we'll get the 5 up in here. And we'll see what happens. Support down here. If we get down there for some reason and start down, that's a caution right there. Could hunt for support at the 30-minute, right around 6,700. And then the 1 hour below that would be down here at 6,650. And the 4 hour below that. And if you don't have my handy dandy line, go to the channel homepage, watch the video, give you the code. If you want the easy button, links in the description. It's like $5. There you go, everybody. Have a great day. I'll be on Market Masters in about an hour, 11:30. And then I guess I'm on Roger's show at noon too. So I have to leave Market Masters, come back to Market Masters, go be on Roger's show for a little bit. Have a great day.